don't we go ahead and get started? So look, we're just delighted to have the CEO and the CIO of Citizens, because it's the Citizens Tech Conference, for a fireside chat. Bruce Van Saun is sitting directly to my left, is the CEO, and we're going to spend a little bit of time getting to know him. And then on the end is Michael Ruttledge, who, as I mentioned, is the CIO. So my plan is we're going to go about 45 minutes. We'll do like 5 or 10 minutes talking about Bruce's background, and in that process, Bruce will get to tell us a little bit about the Citizens Bank story at the same time. And then we'll talk about technology and strategy at Citizens. And then we're going to leave quite a bit of time at the end, so a good 10 or 15 minutes at the end for questions from the audience, because to me this is a pretty unique opportunity because these two control a super significant amount of spending and the whole dynamics of how those decisions get made.
He always wishes it was more.
Yeah, I do.
Okay, let's go. So, Bruce, we're going to start with you. So you went to Bucknell undergrad, right? And then Chapel Hill for your MBA. And it looks like, was there anything in between, or did you go straight through?
I did a stint at a public accounting firm to get certified.
And a little bit of public accounting. And then after Chapel Hill, General Mills, right? So walk us through a little bit about General Mills and then how you got from there into financial services.
Yeah, that was a very short stop, but coming out of grad school, everybody wanted to go work for a Fortune 500 company, so I had the chance to go work in the treasury of the non-foods division. But shortly after I was there, they decided to spin off non-foods, and they wanted me to go to Minneapolis. I was just engaged, and my wife was getting a job in New York. I went to a recruiter. He said, if you want to have a dual career household, then financial services is where it's at in New York. I can get you a placement at a good financial services company. So just like that, I went from Fortune 500 aspirational career into financial services. And I worked at a number of firms, Kidder Peabody, Washington Carvella, Deutsche Bank. Is that right?
Yeah.
Went to Bank of New York. We merged with Mellon. I did that for 11 years. Then I was recruited to go over to London to help fix RBS. I did that for 4 years. One of the things that, this is a very Cliff Notes version, one of the things that RBS owned was Citizens, and they had to dispose of it under kind of a mandate for getting a bailout. So they sent me back to come and take Citizens public. We had 3 years to fully dispose of Citizens, which we went public in September 24th of 14. We did 3 sell downs. RBS was out of the stock by late 2015, and we've been on our own for almost 10 years.
So when you went to RBS, it was not specifically to work on Citizens?
No. I knew, at the time, RBS was a gigantic bank that had 186,000 people, 1.6 trillion pounds of funded assets, and we had to get out the Elon Musk chainsaw. We had to basically cut. And by the time I left in 4 years, we had it down to 100,000 people. We'd sold a lot of portfolios and businesses. So if you receive a bailout, the state aid rules require you to simplify and shrink. So that was the mandate. We wanted to hold in Citizens because we thought it was a franchise with some potential, but ultimately that went on the chopping block, which actually, in a funny way, worked out good for me. So
it worked out great. And so, I was just going back and looking at it. So were you the CFO of Wasserstein for all it?
Yes. Yeah.
You were still in your early 30s.
I was 32.
Yeah. So it's pretty remarkable to reach that sort of level at that age, right? And I'm just wondering, how did you get there, right? And so what's your philosophy on how people can drive their career and succeed?
Yeah.
And where this is coming from, by the way, is Bruce did a podcast on something called the 30-Minute Mentor, and I heard it and I loved it. So share it with us, Bruce. What do you think? How do people get ahead in their careers? How do they?
Yeah, I think like 32 now out here in the West Coast, it seems old in terms of people making their fortune. But for more traditional careers, I was climbing pretty fast. And I guess what I would say is that, to have a successful career and have good traction in your career, you need to work really hard. And you have to set goals and try to stand out and do a little more than what's expected of you. Think of things that allow you to contribute above and beyond. I always try to work for really good people. I try to be self-aware. I wasn't defensive. I wanted people to critique me and kind of figure out ways to improve. And if you really reach for some stretch goals, you're not going to achieve them all, but you just have to keep a positive mindset. Dust yourself off, learn from any mistakes you make, and come back and get them even harder the next time around.
Keep a positive mindset.
Yep.
Love it. I love it. Okay. And then Michael, just quickly on your background, you're originally from where?
I'm originally from the north of England, Leeds.
Yeah. And you joined us in 2019, right?
26 years.
Before that, you were at the same place for a really long time.
Yeah, it's true. I was at American Express for 30 years. So split between the UK, where I started my career, went to Spain, did a stint there with American Express for a year, running their MAS team. And then we consolidated all the data centers worldwide into Phoenix, Arizona. So I ended up in Phoenix. So probably I'd always in technologies, but I had about 15 different roles in that time. So I did a little bit of everything. I started, when I came to Phoenix, I was working nights, doing the night shift, production support, then moved into the development side, then moved in, was the CTO and ran architecture, then ran the data team, and then went back into a traditional development role. So just did the full gamut, and that positioned me well to come here.
How did the phone ring? What was the connection in 2019?
It was interesting. I really wanted to be, I was one of 4 CIOs at American Express reporting into an enterprise CIO. And I really wanted to be, have that head job and be able to set the strategy and the vision. And I actually had 2 other job offers when the phone rang with Citizens. One was in San Diego, which was quite appealing. Another one was out in Seattle. But Bruce rang, and I think it was a bit like the sessions here. It was like speed dating, right? Because it was, he got me to meet.
San Diego's no match for Rhode Island.
That's true. That's true. But we did 10 interviews in maybe 2 weeks, and they got an offer out to me in the 3rd week. And, I was just really impressed. I was really impressed with the innovation mindset, with the caliber of the talents of the people they had, the focus on the, colleagues, customers, community. And I accepted and never regretted it. It's been a great journey. I've had about 100 engineers follow me from American Express, which has been great. Not many.
Over time.
Over time. Phoenix has gone from, 10 people to 120 people. So it's been good.
All right.
And it's great for us to, you think about the key hires as you build out your team. We had been scuffling a bit, playing catch up in technology up until we brought Michael on board. But when you get great leadership in place and they have great followership, they have a vision and they align their organization around that vision, and they have a mindset on delighting customers and working closely with the business lines. It's night and day. So much progress in, 6 short years?
Yeah, thank you.
All right, let's talk about one of those areas. So, for people who've been in New York in the last couple of years, there used to be all these branches and ATMs that were red, and now they're green, right? So Citizens is suddenly all over New York Metro. And so Citizens has been investing in the whole online and mobile platform, but then at the same time, we bought 200 branches in New York, right, Bruce? So why, it seems for technology people, it seems a little counterintuitive. Why buy branches, And how do you view sort of the relative importance of those two sides?
Sure.
Right? In person versus the automated.
So it's funny because when I first arrived at Citizens, we had about 1,200 branches, and then over ensuing years, we had thinned out about 200. We were down to 1,000. Then we went out and said we have an opportunity finally to solve the hole in our footprint, which is getting into New York. And we acquired 200 branches, and we were back to 1,200.
Right.
So you say, okay, what's going on here? But I think to go into a new market like New York, you can't do it digital only. You can't do it kind of with the power of your phone. People value having all the channels available to them, an omni-channel experience, so they want to be able to go into the branches. And the branches are more advice centers now. So if you're having a face-to-face across the desk with somebody who can impart some wisdom or help you with a particular complicated transaction, that's something you do in person as opposed to something you do on the contact center or something you can easily execute on your phone. Our most satisfied customers use all three, but again, we just didn't see a way to kind of really make progress and inroads into New York City without having those branches. So far, what I would say is, we've invested in all the channels. Michael's kind of very active in investing in our mobile platform. We shot up the super regional league tables to be number 2 last year in J.D. Power with all the consistent investment that we've made, and we have another effort to go beyond that to close the gap with the mega banks. So that's been really important. But the branch presence in New York, it's our fastest growing region. We grew our households last year by mid-single digits. We grew deposits by high single digits. It's an expensive market to do business in, but the flywheel's going. We're having good traction there.
Great. So when you speak at a bank conference, everyone knows what a super regional is,
Yeah.
what a mega bank is, and
Right.
not necessarily here. So talk just a little bit about, what's a super regional, where are we, who are the mega banks, and then we can talk a little bit about how much they have available to spend
Well,
on
mega
technology
banks
versus us.
were previously money center banks, people would say. So basically the big 4 banks in the U.S. Would be JPM, B of A, Wells Fargo, and Citibank. And then there's the next tier down. There's about 10 banks that maybe started out in a region of the country, but as things have evolved, we're now putting flags down around the country, so they're called super regionals. So we're kind of in that group. There's 3 kind of what they call category 3s, which would be PNC, US Bank, and Truist. And then we're in the category 4s, we're the biggest in the category 4s at about $220 billion of footings.
All right, perfect. And so the mega banks, how much do they spend on IT? And
A
how much
lot.
do we spend on IT?
A lot less.
Yeah, how do we?
So
how do we bridge that
how do
gap?
we make that work?
Yeah.
First off, they have very broad business models and in many geographies around the globe and in many different businesses like trading, which absorb huge amounts of tech spend. So you kind of have to look at it like for like where are we facing off and going head to head, and then how can we stay competitive there. One of the secrets for the regionals is we kind of work with vendors like FIS and Fiserv, and so we run off systems that the whole industry is benefiting from. So that volume of all our competitors on some of those core systems kind of keeps them scaled up, keeps them fresh in terms of innovation and competitive with what the big banks are running on. Having said that, you also need to be really good at things that affect your customer, that last mile to the customer experience. You have to have good people, you have to listen to the customer, you have to be able to innovate around how you're delivering for customers. So you can kind of make the core work off kind of somewhat of a utility platform, but then on everything else you do, you have to be really good. And one of the things that is increasingly important is data and how your data is structured and organized, and how you can personalize your interactions with your customers. And then the data also feeds into AI, which is another thing. So we've spent years, really focused on that data lake and organization and how to drive use cases out of the data we have. We happen to have our Chief Data Officer sitting here in the front row, Krish Swamy, formerly of Wells Fargo. But in any case, we've got, I think, really good people. The other thing I would say there, Pat, is that if you're more of a frigate than an aircraft carrier, you can navigate things and be a lot quicker to market. And so our innovation cycles, I think, are faster than the big banks. We're able to get to the cloud faster. We'll have all of our applications in the cloud by the third quarter of this year. And the big banks are kind of miles away from that. And that adds to your ability to innovate. Once you get into the cloud, you can operate, much more nimbly. So now I'm probably out of my depth, and I should probably pass it to Michael.
We're going to be entirely in the cloud by Q3?
Yeah?
Yeah, by the end of this year, we will have moved every application. We're about 70% right now, 73% right now. So, as I said, we wouldn't have been able to do this if we weren't nimble. We've done that in 3 years. We've exited 18 data centers. We're going to exit 7 more. By the end of this year, we'll have exited 25 either data centers we own or colos we'll be out of. We've done 10 acquisitions during that time as well. We've eliminated 900 applications. So, we're very conscious of that. We're moving very quickly. But yeah, by the end of this year, by the end of third quarter, we'll have got all our applications will be out, and then we'll go to, doing all the decommissioning of the network, the servers, the space. And by the end of the year, we'll be out of our data centers.
That's remarkable. Like, how many applications did we start with?
We've got about 1,600 applications altogether. So, yeah.
It's kind of like moving, right? You know how when you move, you actually finally clean everything out.
Exactly.
Yeah.
Well, that's what I'm excited about.
Clean it all out. All right, Michael. So what are the top things that you're focused on in terms of the most important tech investments?
Yeah, we've been on a journey. I call it next generation technology. I've talked about this before, but it's really 5 pillars: moving to agile, really leveraging data and APIs in our ecosystem, engineering talent, taking out costs so we can reinvest in revenue generation, and then finally stability and protecting the core. We're regulated. We have to protect our customers. So I'd start with the bottom one, actually, the 5th one, which is stability. So we've really invested the last few years on really making sure that we have the right stability of our systems for our customers. And we see it. We see when stability goes down, there's a direct correlation from our customers, both our commercial customers and our retail customers, to the NPS scores. So it's really critical that we keep these systems, always on. So, we've implemented a lot of changes in our online banking, our mobile systems. We've created caches so the systems are always on, they're never down. If it's down, you can still see your balance. We've improved the network. We brought in things like ServiceNow to really improve our problem management, our change management. So, we bought Datadog, to help us with our monitoring and alerting. A company you introduced us actually to. So, just really reinforced on the stability side. And then as far as new capabilities, Bruce touched on this, but we've really been enhancing our mobile and digital capabilities. So everything is built on the web now. Everything's on, our mobile app is on AWS. And we've got a program this year called Leapfrog that we're really trying to improve not only the look and feel of the mobile app, but how we're getting to customers. We're partnering with a fintech called Spade that's bringing us data from merchants, merchant category code, classifications. We're using that to really increase the penetration of our customers. It was 69% last year. We're trying to get it to 76% this year in terms of penetration. So a lot going on there. Another one I'd highlight is Vista, which is a brand new account system that we've just launched. Once again, completely on the cloud. Now, our small businesses.
Okay, now this is really important, right?
Yeah.
The new account systems.
Yeah.
Okay, we have a technology audience. Why is the new account system so important to a bank?
You want to get those customers into the bank, right? You want to make that frictionless experience for them. So It used to take us 14 days to onboard a small business. Now we can do it in 1 day.
Yeah, and how many small businesses are actually willing, like, do they churn off during that 14-day period if it takes too long?
Of course,
Right,
of course, of course. So you'd probably have some of the guys in here, those numbers, but, so it's really critical. And now we're doing it seamlessly, working with Chris's team, we're leveraging all the data behind that. So everything is pre-filled. They hardly have to fill in everything. If they have got company statements, we use OCR technology to read that, to bring it in to the system. There's no faxing, there's no taking something into a branch for them to copy it. So, and then our platform approach is, we rolled it out to small business, next we're rolling it out to retail customers. So we just launched it, I think last week actually, to our retail customer base. So you can do the same thing, whether you go into a branch, you can start an application in a branch, you can complete it at home. So it's really exciting. And then on the commercial side, we've got a lot of commercial bankers in here, so I don't want to forget about them. We're also completely revamping our commercial onboarding platform in Salesforce. So once again, leveraging APIs, leveraging the data
Are you
that we have.
Salesforce?
In Salesforce,
Really?
yeah. So, Salesforce is used now. We've increased it probably 10 times since, in the last 5 years, but it's now used not for commercial, for private banking, for our wealth business. So, we're pretty heavy users of Salesforce. And now we're doing the onboarding in that, once again, leveraging the data, leveraging the APIs that we have. So it's pretty exciting.
Okay, so the big one in commercial bank is what you're doing with Salesforce.
Yeah.
Consumer bank, the account opening.
Yeah.
What about private bank?
Private bank leverages a lot of these same, the same technologies. So some of the online banking enhancements that we'll be making are being leveraged by private bank. We also launched a system called Cash Fundamentals, which cash flow, help me out, Cash Flow Essentials, thank you. And that is designated for small businesses, and it sits in between Access Optima, which is our onboarding system for our very large corporate customers, so in between. And we launched that this year, and that's been highly successful as well, enhancing it all the time.
The single sign-on is another thing that's quite critical there, because the entrepreneurs and private clients that we serve will have complicated lives across businesses, individual accounts, investments, trusts, et cetera. So the ability to actually get in onto our systems and then navigate around without having to log off of individual areas and systems and be able to just go around and see what they want to see and write reports as they want to write them, kind of getting that to the next level. We call that white glove service. It's not easy, but we're making really solid strides on that.
Yeah, absolutely. And then we're going to where our customers are as well. The work that Tyra is doing in the payments business, she's embedding in commercial applications, so the people don't even have to come out of their own system and can get access through APIs to our services, through open banking. So that's really exciting work we've been doing in the last year. We've been partnering, with a lot of the aggregators, people like Plaid, where 95% offer screen scraping now, leveraging the open banking, FDX APIs, and then we're now partnering with some of the smaller aggregators, doing data sharing agreements and getting them on board to use the APIs. It's not only faster, but it's much more secure for our customers, and it's given us some new business opportunities in the open banking and embedded banking space.
Awesome. All right, let's shift to Gen AI, because it's a unique opportunity for me to have both of you up here at the same time, because the world has changed so fast, right? And so, Bruce, you have to set some guidelines, right, for what the organization can do with the technology that's changing that fast, right? From a CEO perspective, when did this topic start hitting you? And I assume it was at the board levels, or right when ChatGPT came out 2 years ago. And then how have you wrapped your head around it, and what kind of framework have you provided for the organization?
Yeah. So I think we have a broad philosophy that we have to really channel resources behind the best use cases. And those are cases that would further our strategy. They'd be kind of right in sync with the important elements of our strategy, and they could deliver real tangible benefits. So, you walk before you run is another maxim I like to say, and Michael's heard it a million times, is Rome's not built in a day. So last year, we basically picked 3 down-the-fairway use cases, which I think many banks are kind of in that same vein of let's go with the ones that we know will be successful and have good impact. And we executed those very, very well. And so we also were, while we were doing that, starting to think through, like, where are some of the other areas that we can build out some use cases, and then
I know everyone's going to know, what were the 3?
the 3 from last year, one is code assist, so it's really helping software developers write their code and test their code. So that was one. The other is contact center, in helping the agents, how they deal with customers. And the third is in fraud, and kind of making sure we're kind of at the vanguard of fraud defense. And so as we pivoted to this year, we're going to have probably about 10 to 12 significant cases that we also think we can support, and that we can execute, and we can deliver real benefits on those. We are regulated, and so the regulators look over our shoulder every time we're doing these new changes, and so we had to put kind of proper governance around that. But I think we're going at a good pace now, where we're not at the head of the class, but we're kind of certainly not all the way at the back of the class. We're kind of, I'd say, what would you say, Krish, kind of middle to top half, somewhere in the top half, but not at the bleeding edge. So feel good about that. And then the other thing is to look at how do we get the tools, how do we get the Microsoft licenses out to our colleagues, so that I think we have 2,000?
2,500.
2,500 licenses that we want to push out, so people who are serving customers or running the bank can look for opportunities to, how can we deploy this technology to turbo boost our colleague productivity, serve customers better, run the bank more efficiently. And so those are not going to be monitored centrally. We do have some ground rules as to how to use those things, but you want innovation, you want empowerment, you want people to kind of explore and learn as they go. So that's how we're approaching it.
I'm one of the, how many was it, 2,500?
You got one?
Yeah, I have. So I have a co-pilot license. Is that what
Okay.
we're
That's
talking
it,
about?
yeah.
Yeah, and you just kind of have to figure it out, right? So it's great at answering questions. It's great at answering questions about my research, something I wrote 3 years ago, right? Which I otherwise would have to go find. What I can't get it to do yet is give it 3 of my old notes on Salesforce, for example, the press release and the transcript, and say, write the first draft. So that's what I'm really, that's the use case it would be great for me at some point. Okay.
It's coming.
I guess, how are those, so if we look at those 3, code assist, contact center, fraud, I don't know, Michael, which one are you happiest about so far?
Well, if I look at my own shop, it's about eating your own champagne, right? Drinking your own champagne. So we are using Code Assist, so Microsoft GitHub Copilot, and the results have been phenomenal. We've rolled it out to 1,000 engineers, and the excitement that it's generating, but also the productivity. It's really helping them, generate code faster, higher quality, helping with code documentation, helping improve testing. So it's there's some really, really great results, and I think we'll continue to roll it out to the rest of the organization. So one's been
part of the trick on that is measurement. So how do you measure the boost of productivity that you have? And then the question you get to in the fork in the road is, if we're actually doing things more efficiently, what happens with the dividend? Does it go to the shareholder, or does it stay in the company and you just, there's always more projects than you can actually fund, and so do you just say, if I'm now 20% more productive, do we just pull in the next level of projects that didn't kind of make the cut line, and just now we're getting more done?
Yeah.
And so those are kind of nice problems to have once this thing really kicks in and we get all the benefits, and we can start to quantify those benefits and make conscious decisions around kind of what to do with the dividend.
Yeah, we have an answer to that. We reinvest it in technology solutions for Krish, for Tyra payments, for Paul in commercial. So
Yeah, they're here, but the CFO's not here. So, we'll have those discussions.
have those debates. True.
Okay, and then I want to get to the sort of future AI use cases. There's too many, right? Though, like, pick what's something that we're thinking of doing that would be super interesting.
Well, we've been really excited about the rollout. That Bruce touched on it, but our customer contact center. So we're really focused on humans in the loop type use cases at the moment. We're not unleashing Gen AI direct to our customers, but it's been really successful in helping, especially, frankly, our most, which we didn't expect, but actually our most experienced agents have got the most value out of it. And what it does is it really, we had an existing tool that surfaced up product information, but it gave people, 6 Word documents and highlighted different products. Now, of course, through the OpenAI and the RAG technology we're using, it'll come back with very specific product information that those customer service reps can give our customers, and it's really, really powerful. But to your question, you can extend that and say, well, eventually you're going to be able to do that direct to the customer base. So you may not need may not need as many customer service reps to do that. And I think that's where it's going. And then agentic AI as well. Yeah, where now you can do 3 steps where you're not having to pass customers from one place to another. You can actually take the actions on their behalf. So I think that's where we're going. It's really fascinating technology. We're dipping our toes in that right now. I think we need to go faster. We need to do a little more. And I think Krish has got some great ideas there, and we'll be definitely diving into that.
I think the other area that I find intriguing is in the commercial bank, the amount of effort that goes into portfolio reviews to see what's transpired at a company over the course of the year and write credit reports. So much of that is just busy work that you could use the power of AI to simplify and really boost productivity. And even in credit origination decisions, there's a lot of legwork that can be done to kind of bring it in front of the wise people to make the decisions, and all the grunt work can get kind of alleviated. So there's some great use cases coming on the commercial bank as well.
All right, why don't we have 15 minutes for Q&A. I see a hand in the back. We just have to remember to repeat the questions.
Any areas that we de-emphasize?
Yeah.
I think we've, in terms of funding that amount, I'd say we've just been able to work it in. So one of the things that we've had to navigate is kind of how much we spend on kind of run the bank versus how much we're spending on innovate and kind of go forward. And so as the Michael progress we've made, and we spent a lot of money in getting to the cloud, there'll be a step down once we get there. Already this year we're spending less than we did last year. The investments we made in stability, again, once you've built them, you put the new network in place, and you don't have to spend as much. So I'd say what we're aspirationally hoping for and starting to see is that some of that kind of build out the foundation, run the bank, cost goes down, and then we can do more towards innovation. Yeah.
Yeah.
So a question maybe more for Michael, but on a company Confluent on their earnings call mentioned Citizens Bank is transitioning from open source Kafka to Confluent DSP, digital banking offering. This is a streaming data company.
Yeah.
So I'd love to understand more about streaming and what things you fit in now at this point, and is there something special going on in these categories, or
Yeah, no, it's a great. Did everyone hear the question? Shall I repeat it? Or did everyone hear it? No, it's good.
Summarize
The
it.
question was
Yeah.
Confluent. Which
Yeah,
is
we've moved from the open source version to the paid service, and certainly that's because the usage has expanded across the bank, but it's really part of our overall sort of data journey. So, we started having many sort of siloed platforms, data appliance solutions. We moved all of them into our data lakes, and now all of our data is in one place. And then data is becoming so much more fundamental to a lot of our real-time data usage, becoming so fundamental to some of our cases. So everything I just talked about, you look at our mobile bank, it's reliant on, real-time data for information. So the work we're doing with Spade to get data enrichment, it's all being done, real-time through Kafka. So, and I think we've got about 30 different use cases now with Kafka in the environment. So, we really think that real-time data is what's really, really important to enable what our customers want, to really improve the customer experience. So, yeah, we've now paid for the service as opposed to using the open source. So, what you read was accurate. You don't work for Confluent, do you? No. Okay.
Bruce, how does the new administration change how you think about business?
Yeah, so that's a loaded question. But I would say, it's interesting. The whole market was kind of very excited when Trump won the election, and bank stocks were up, mid-teens percent, and the stock market overall was up. I think no one ever thought it was going to be a straight line to get to kind of pro-business, policies with less regulation and sound tax fiscal policies and pro-energy orientation. There were kind of wild cards around tariffs and kind of the impact of how widespread the deportations were going to be. And so I think rightly so, the market kind of leveled off after the initial euphoria and has kind of taken quite of a wait-and-see attitude. There's a lot of uncertainty out there, and the announcement today that the tariffs on Mexico and Canada are going through full force and effect caused a kind of minor meltdown in the market this afternoon. So I think, we look at the year, we thought this is going to be a sound year from a GDP. All the fundamentals of the economy were going to be fine, and we'd have decent unemployment, inflation would stay under control and start to trend down a little bit. And the kind of pent-up deal, new money deal flow that we haven't seen over the last 2 or 3 years, hopefully we'd see that start to break and pick up steam as the year went on. There's a lot of pressure to make that happen. There's a lot of conversations, but we're still kind of waiting anxiously to start to see that pick up. So I'm not surprised that we're in a choppy environment right now, and I just don't know kind of how it plays out necessarily. Is the 25%, is it just we're going to show you that we're serious and you better do what we want, and it's all about negotiation and tactics, and something settles that's kind of okay broadly to the market, or is just going to be a world of a lot of turbulence and friction and conflict to get through, and it extends through the whole year? If that's the case, it won't be necessarily as good a backdrop for everybody as we had hoped. Having said that, for us, I don't think it changes that much our take on kind of how much we want to invest in our businesses, that we have the right strategy. I think we're, we talk about our strategy being a tripod, that we have a transformed consumer bank, we have the best positioned commercial bank, and we're aspiring to build the best bank-owned private bank and wealth manager. I think those are great foundation blocks for Citizens to thrive over time, and I think our revenue outlook may not fully come to pass, but I still think we're going to have a pretty up year on revenues, which allows us the wherewithal to keep investing in the business. So far, no change, but we're obviously monitoring developments. Sure.
How do you see the relationship between traditional Citizens and fintech companies evolving in this space?
Yeah. The question is, how do we see the relationship evolving between traditional banks like Citizens and the fintechs? And I would say, we've had a very long historical relationship with fintechs going back probably almost to the time of the IPO. And so we probably had, back by 2015, we might have had 25 fintech relationships where some of those are mutual convenience, like we would buy, we had flow agreements with SoFi and Affirm to buy some of their paper. But we had, I think, lots of opportunity to incorporate great new technology in terms of how we're running the bank, like credit scoring models from a fintech, or customer experience in terms of things that we could incorporate into our offerings and deliver through to customers. So I see it always as kind of a benefit when there's new forms of competition and innovation. You have to kind of look and say, is this more of an opportunity or is it more of a risk? And if it is a risk, how do you turn it into an opportunity? So I think we've become very facile with looking at how to partner and drive business value from those partnerships. This guy here and his team are out here, and having this relationship with JNP gives us kind of an early look into lots of new and emerging companies. There's a couple that are here that we're kind of looking to incorporate their offerings into things that we deliver to our small business customer base, for example. So that kind of embedded fintech into larger financial institutions is a real opportunity both for them and for us. Yeah, I'd say, our view is positive, and more competition forces us to be better in terms of how we're running the bank and how we're delivering for customers, and we want to continue to access that innovation in terms of how we operate.
Awesome. All right, I'm going to ask the last one, which is, so what are the priorities for us in terms of investing, looking forward?
Okay. Do you want that on a tech, or do you want that on
no,
a
we
broad?
want a tech. We want to know what stocks to buy.
I'll turn it to you then, Michael.
Look, we're going to continue our investment in digitization, right? It's fundamental. It's where our customers want to be. So we're going to continue all the investments that we're doing to really improve the customer experience, make it frictionless for customers, whether that's the online systems that they use, whether that's the mobile apps we're going to use. So we're continuing to invest in that. Private bank that Bruce mentioned earlier is a big source of investment. So, we've got to integrate some of their systems into our systems. We've got to create, in some instances, brand new systems. Same with their wealth management as well. We're doing a lot more investments in those areas. Payments is an area that I think, is an area that we really think there's a huge opportunity. So we're investing much more in the payments landscape, both traditional payments, but also, as Bruce mentioned, in the embedded finance areas where I really think there's just a ton of growth in those markets for us, and a lot of partnerships there in the fintech space. Tyra Hall, take a bow, but she's out there leading our sort of partnerships with all the different fintechs in the payment space, which is really terrific. We've got a lot of new partners in that space. We'll continue with our focus on obviously big focus this year getting into the cloud. I mean it not only reduces our cost, but it allows us to be so much more nimble. Going back to Bruce's question, how do we compete with the giants? We're going to be 100% in the cloud. It's going to be so much easier for us to deliver. We've delivered all the pipelines to move into the cloud. Our releases used to take a day. Now we can do it in 15 minutes. So I think we'll continue to invest in that technology, continue to invest in Gen AI. I mean, we're touching on it here, but I think we've in a short amount of time, I think we've moved the needle. We've created a whole Gen AI platform, and now we can link to whoever we want from that platform. We've created all the appropriate guardrails, security, privacy within that platform. And now, whether it's OpenAI, whether it's Bedrock, whether it's Gemini, we can go out to any of these providers, NVIDIA, and you start leveraging best-in-breed LLMs, best-in-breed Gen AI technology. So really excited about that too.
I would just say, I looked at the profile of the companies that present here, and clearly AI is like right at the forefront of what the market's excited about, and there's a lot of offshoots of that. How do you actually drive the kind of overall embrace of AI and make it more easy to use? How do you almost democratize it so that you can push it deeper into the organization, and there's less need for the fancy degreed people with software engineering degrees and AI specialties, et cetera. No offense, but that is kind of a real breakthrough that I think companies are starting to think about. That is to make it much more ubiquitous and really unleash it. So I think that's exciting. The whole use of data and how do you organize data, clean it, and so make it kind of very easy to kind of in-source into the AI tools. You can't get to first base if you don't have that. And so kind of data management and those kind of companies really are pretty exciting. And then I think the whole, Michael's last point on protect the bank, the whole cyber world, the world is just so rife with bad actors that banks have a full-time job just trying to make sure that we're protecting our customers, their assets, but their data and their information. And so we see lots of great innovation with companies that are helping us think through, where are the weak spots potentially, and how do you really shore those up and stay kind of always on the front foot against these bad actors. And so it's cyber, it's fraud. There's just kind of a full-time job there. And so the budgets are pretty full inside financial institutions to keep looking for the next wave of new tools to stay one step ahead of kind of the bad actors. So those are just a few of the areas that I would also point out looking at kind of some of the folks who are presenting here.
Great. Bruce, Michael, thank you so much. It was a great overview of technology at Citizens. We appreciate it.
Okay, thank you,
Pat.
Pat.